George is we were trying to put a deal together for Ninja Karaoke. Did anybody see that? We've only had about 20 responses that people that want to go. It's basically a Saturday night, or we could do a Wednesday we want to do as well. Try to get at least 50 agents because there's going to be a cost to it because we can't pay the whole thing. But it's Ninja Karaoke. It goes to a private room. They got a DJ. It'll be just a fun event. We're trying to get the realtors involved to see if they want to go. We have to have at least 50. 50 agents would cost each agent $28. And then Epic, Rock, and Northwest will cover the rest. But we have to have something. We got to know how many people are going to go because if we can't go, if you can't set it up, then we're just going to have to stop. We're not doing it. So look on Facebook. It's in there somewhere. So we did a survey. So I'll make sure and see if that's something you guys want to do. Is anybody going to the general membership meeting on Friday? No, I wasn't going to either, and I tried, and it sold out. So if you want to go, I think they said you could go down there and wait. If somebody doesn't show up, you can get it. I think it was $35, and you get the $35 back off of your next dues. So has anybody ever been to one? Okay, so 2 of us. You're not going to get me today. You're not going to get me. I'm not going to follow that. Good morning, Nora.
Good morning. What's that?
You're not going to get me today. You got to cuss and scream, so I'm going to be cool.
What? What I just walked into.
So, where did I do? It's in your packet. It is. I just want to test this real quick. How many people are reviewing this, right? There. Stop. The commencement date, the submission date. Is anybody reading that and following any of that nonsense? I know, Suzanne, you have. Can you enlighten us a little bit on what you've come up with?
Well, I was just on the listing appointment and I filled it out wrong, because you can't fill it out on the day that you're doing the listing appointment. It doesn't start then, it's like the marketing dates.
Yeah, so basically what it is you can take a listing today, and let's say you gotta work on it. They're gonna work on it, so it's not a coming soon listing. We signed it up today, that is the date that we've consummated it. Then we got the commencement date, means the starting date for the listing agreement, which exclusive rights of agency relationship between the listing broker and seller begins. Okay? Submission date means the date identified in the listing agreement by which the listing must be delivered to the MLS. When does the listing have to be submitted to the MLS? 24 hours. We have 24 hours to submit that. So, guys, I've looked at it a couple times. I think it's a little confusing to say the least. Why we did it, I have no idea. But that's what they've done. So it is changing the listing agreement, so make sure you're telling which dates you want to do. If you're going to put the commencement day, you only have 10 days to do the submission day. So make sure you understand that. Don't get caught up in that way. Here I said this is right from LVR. So if it's clear as mud, then we can talk later.
I think 10 days is not enough, when it's a lot of.
I think it's kind of, I think if I'm gonna do that, I would do a coming soon listing. I think if I was gonna do anything and they had to repair something, I would do a coming soon listing, is what I would do. I don't think I would get involved with all that. If you don't have a submission date, the commencement date is the date that it starts, so make sure you understand that part.
What is the submission date?
Submission date is the date you want it to go live. So I'll take a listen today, I want it to go live next Tuesday, that's the date you put
On
on.
my listing agreement, I did the listing agreement today and I put it in the MLS tomorrow.
Yes,
What I
that's by law, 24 hours you're supposed to put it in the MLS. Hey guys, I don't make them up, okay? Honestly, it drives me crazy some of the things that we do.
Have they shared at all, like, what the thought process was behind that?
Um,
Or is it just because of all the drama? That
I think all the drama, you guys, is really because of clear cooperation. You heard where a couple of the bigger firms and, back east sort of are trying to get the clear cooperation is what they're really, I think, is they're trying to do. So that's why they changed it. Again, guys, I don't go down and get involved with it because I think a lot of times it's a bunch of nonsense. But I think that was their thinking, is the clear cooperation, because it even says in here, it talks about the clear cooperation. So just make sure, again, we can sit down and go over, I want to beat it right today on that, but just make sure you read this and then we can sit down and go over it, make sure you get a full understanding of it. Let's bring up Dave Gonzalez with Epic, give him a big hand. All right, Dave, give us a good rate.
Yeah. All right, don't anybody throw anything at me, please.
Did anybody see the video today from Ricky at Epic? Anybody see that today? Ay, ay, ay. Okay, you're not gonna get me today. I'm not gonna do it. I'm not gonna cuss.
Come on, I'm ready.
Do it, come on, get it over
See?
with.
Don't point it to me. Here we go.
Okay, go Dave.
All right, so, yeah, let's talk about rates. Rates are, 10 years at, like, this morning I checked at 4.45, and like I said, you can add 1.5 to 2 points to that to get what the conventional rates are right now. And they're about 6.5. You know, Patrick and I were talking this morning, and I mean, FHA is still pretty good. 5.625 is not bad, depending on what you want to pay. VA, 6.25, sometimes 5.75, depending on credit, debt income, and all that good stuff. You know, stuff I talk about, credit income and asset analysis. So, you know, we're hoping for the market to stabilize, but as you all know, depends on what happens in the world, and that affects our market. So right now, there's a little problem here and there, right? Anyway, I wanted to tell you today about Homes Possible. They have a thing called Workers Advantage, and I don't know if you guys are familiar with that. You guys ever look at that? You really should. The reason I say that is Workers Advantage can give you, the rates are like 5.375 up to 7%, depending on which program you choose. And it's applicable to specific industries, employments, construction, public safety, education, and qualifying professionals. And there's so much more on it than there used to be. Used to be only open to certain individuals, but they even added medical assistants, in the school district, janitors, they can use this program. So they've really expanded it. You really need to expand your knowledge on this because it can really help you find more qualified buyers. Okay, because I think that's what we're looking for right now, right? Qualified buyers. And FHA, like Patrick and I were talking this morning, it's easier to underqualify for. Only 3.5% down, and sometimes some of these plans will give you enough money, like $20,000 for down payment and closing costs, and pay almost all your fees. And it's FHA guidelines. It's still a great deal, so please consider that. And they do have other programs, but if you guys are interested, I can post a link on Facebook to Homes Possible, Center Nevada Housing, and they have some great programs. And right now, I know we're all looking for buyers, because I think it's a little slow, isn't it?
We're actually still rolling pretty good. Things are still doing really well.
Okay, well, let's pick it up a little more, right? Yeah, that's what we want.
This office has sold so far this year just a little bit, just under 160 million. This office, and 71% of our agents in this office are producing agents, so that's a super high number. That's a really good number.
Yeah, that's a lot of agents, that's good.
Yeah, when you consider 900,000 didn't do a deal
Right.
last year.
Yeah, I was just gonna
So
say.
it kind of gives you an idea.
Yeah. So everybody's,
Workers what?
Workers Advantage. Yeah, Homes Possible. And if you Google Homes Possible, it'll take you right there, Homes Possible. And realtors, they have some really nice marketing programs in there for flyers for realtors specifically that you can use to promote this. You guys are gonna have an open house or something. I don't understand why you don't have a flyer for that. At your open house, you really should. Okay, and I know somebody can get you some stuff. Here. Okay. Did I mention that?
Yeah, I think so.
Okay, so, Reva, thank you for those who attended. I had donuts there. If I can get more people out there, I might even spring for a little breakfast.
It was a great class too, by the way.
It was a really good class, a lot of fun, very interactive, and they were all trying to stump the loan officer. Which drives me crazy, because this hard bank's full. And when I learn something new, something's got to come out. Okay, but I appreciate that. Next Wednesday, Wind Down Wednesday. Don't forget that. You guys really should try to attend that Wind Down Wednesday. It's fun to sit down and chill and relax a little bit. And,
Josh won a $100 gift card last time.
right.
Gas card.
Right. So we've got to get in spring for an extra one.
Right.
Somebody needs to come in second, right?
Right. I need a $700 gas card, by the way.
Yeah.
That's all I got for today. Jeff, we've got a lot going on. So
Great, Dave. Thank you. Appreciate it. All right, let's bring up George. George, come up and say hi. Give him a big hand.
Hello, everybody. I think I've met most of you guys at this point. If you don't, I'm the new sales rep for Rock Title. I do want you guys to know that I'm a full-time sales rep for this office. I'm really here to service you guys. That's the main point of my job. I would like to invite every one of you guys individually to come in and maybe talk some strategy and kind of see what I can do for you. But for the most part, I really like it, and so far, you know, I love everybody that I'm working with, and hopefully I get to get some business from you guys, and we can talk a little bit about, you know, what I can do for you.
And all the tools you put out, a hydration station out there for everybody, which is really cool. The tools and technology, you guys are amazing. Kath, and there, say hi, Kathy. Yep, she's the, almost said loan officer, escrow officer. She was in our office here, downstairs, so thanks for coming, appreciate that. If you have any questions, you guys, about anything that's going on this week, you can certainly reach out to her. I've reached out to her several times, and she saved my bacon on stuff that I didn't know, so she's very, very knowledgeable about the business, so. If you have questions, you guys, that's what all of our vendors here, if you have questions, let us know.
We're here to help, guys.
Cool.
Thank you.
All right, thank you. Appreciate that, Richard. All right, so let's bring up Jessica Stebbins. Come on up. Jessica's with Richmond American. Richmond American, and we've been partners with these guys for a long time. We've always taken care of our agents. They do an amazing job. She brought breakfast as well. So we're going to, remember, next week, it's on your flyer. We're going to a field trip to their property. So, cool.
All right, good morning, everybody. Good morning. You have a good looking group of agents over here.
Absolutely.
So I am with Richmond American Homes, located in Sunstone. Who's been out to Sunstone? Okay, newer community. I'm excited for you guys to come there next week. I'm bribing you with breakfast burritos, so bring your appetite. We definitely have a lot of good things going on. Tons of new communities opening. I know that we're located here in the Northwest. We have about 4 active communities right now in the Northwest. We have merged with Woodside. So not only can I sell Richmond, I can also sell Woodside. So that's exciting. Exciting for me anyway. Who has questions about the community?
The biggest ones are scissor lids, are they gonna be that, are they gonna be gated, HOAs, all that kind of
Yeah, so.
stuff. Commissions,
Commissions, 3% of total purchase price. Unless you're building from dirt, and then it's going to be 3% of base price. Very rarely do we build from dirt unless it's on your luxury series, and you're going to pick out all of your options. Our HOA is $100 in total. That's for your Sunstone Master Plan and our community in itself. SID's $547. That's billed twice a year. Gated community. I do have some fun things planned for us next week. I want to go through the model. I'm going to walk you through it because a lot of questions are what comes included, what does not come included. So I thought it would be fun to do a little for what does come included and then walk through an actual spec home itself so you can see what it looks like, and trust me, you're not going to be disappointed. Wait till you see the shower on the stage. Any more questions?
What kind of special incentives do you have right now?
Oh, good question. Do we have any lenders in here? 'Cause
Back there.
Yeah, okay, I'm getting that.
I think, don't you guys work with, CMG? Don't you?
No,
Is that a preferred lender?
No, Home American Mortgage.
Okay.
Agency. So
Boo!
I know, oh, sorry. So right now, we're offering 4.5, 4.875. VA, FHA 4.5, conventional 4.875, that's a 30-year fix. And that's for anything that could close by July. We are now doing extended rate lock, so it's not, you have to turn around and close today in order to get a good rate. We're offering, if you could close by October, 4.99 for FHA and VA, and 5.375 for conventional.
And you guys, this is my opinion, anytime you go to a new home builder and they have their own financing, you should use them. Mainly because they're generally, always get the deal done. Okay, and we have some great lenders for sure. and I engage one of them, but the incentives they give, the closing costs, and the ability to close the transaction is one of the most important.
I will tell you though, a little point or a little, I don't know, piece of advice. If you haven't worked with a lot of builders, I didn't know the first time I sold with the builder and I was doing resale, is that you could go in there and negotiate. All builders are competitive builders, like at the end of the day, we all wanna get the deal done. And so when I found out that you could go in there and negotiate closing costs, washer, dryer, fridge, other incentives on top of our incentives, you're able to do that. So it's something that when I figured that out, I was like, oh shit. I
Especially standing
didn't do
there.
a lot.
I used to do that all the time because I would bring my clients to the house and they knew they wanted it, they would leave and I would sit down with them and negotiate wash machine, dryer.
Yes.
Whatever it was that we were looking at, price, all of it, it's all negotiable.
Everything,
guys.
it's all negotiable, so, and it's not so much that you have to send in, offer resident RPA,
Yeah,
right?
right.
So it's not that you have to do that either, you could just sit there, hey Jess, I want this and this and this, could we get it done? And then we could find out in a matter of 5 minutes whether or not we could get it
Yeah,
done.
good.
Okay,
Cool.
so I have a little drawing for us here. Next week we'll be raffling off a gas gift card. Today is Starbucks because all realtors love coffee.
Have somebody up front do it so they're not mad at me. Have
Here.
Don do it right here.
All right.
All right, Don. By the way, you guys, I twice now, I've done a cardinal sin. I was at an event where they were doing cybersecurity, they had 2 metro officers out there, and I didn't bring my cards. Okay, that's one.
Original sin.
A week later, I'm speaking at the Key Expo, don't have my cards. 100 agents, I didn't bring any of my friends.
Yeah.
I'm writing on the back of their napkin, signing them.
Yeah.
Yeah, guys.
You should know better.
Absolutely.
You should know
absolutely.
better.
Hey, at least I confess.
Alrighty, Jose Garcia. Right there?
Nice. Good job. Cool.
Ah,
All right. Nora, you don't actually have you on the schedule, say, come say hi real
I
quick.
just have 2 things.
Thank you, Jessica.
All right.
Remember, guys, next week we'll be at her development.
Alright, I'll see you next week. There's some goodies up here.
2001,
So,
2002.
The Home Impossible, what did you call that program?
Yeah.
Thank you, Jessica.
And the essential workers, first responders, right?
Yeah.
Right? So we have, you guys know we have a first responders discount, it's 20%. We also have a military discount, which is also 20%. And if that isn't enough, for the month of June, we're offering $100 automatically off of all of our plans, which can be combined with the first responders and the 20% military discount. So just to give you some math, Shield Complete, which is our best coverage, it's gonna cover everything, roof leak protection, all the major systems, all the appliances, unlimited refrigerant, complimentary rekey. It's normally $815. With the June promotion, it's $715. And then you take 20% off if they qualify for a first responder or a military. It comes down to $552. You guys, I can't tell you how many times this last week, just this last week, that I've been able to give a buyer 2 years of coverage. Almost for the cost of one, because we can stretch their budget out. So it's all about leveraging your buyer's concession, their budget, whatever it is they have. As always, if you guys had somebody that closed in the last 3 or 4 months without a home warranty, call them. Do them a favor, you guys. Call them. We can still add them on to a real estate policy, and we can give them all these discounts. You guys, 72% of our first year real estate clients, meaning your clients that were in their first year with us in 2025, 72% renewed. That tells us they see the value in a home warranty. Things have gotten ridiculously expensive. Jeff needs $700 for gas.
Yes,
You know what I mean?
please.
So it's, do them a favor, it's budget protection, it's like Stacia said, and she said it so well, we don't cover everything 100%. But you know what, you're not here to explain that. All you have to do is connect them with me. I will set the expectation. I will let them know what a home warranty is for. You're not quoting State Farm homeowners insurance, are you? No.
Better not be.
Are you giving out rates? right? No, you're not. Let me take that off your plate. As a realtor, you already have so much to do, right? When you take it off, when I take it off your plate and I put it on mine, it's their decision, right? And then it never comes back to you. You just said, hey, I connected you, you made the decision. Susan?
How much is your pool coverage and what does it cover?
So our pool coverage for saltwater is $315, and I'm glad that you brought that up. You guys, if it has a salt cell, meaning it can run as either a chlorine or a saltwater, it's a saltwater. So it's $350 for saltwater, $255 for pool, or for a chlorine pool. And we're gonna cover the major components that make the pool run properly. Our coverage limit is $3,000, meaning in a one-year plan, we'll cover up to $3,000 to repair or replace, right, a system. But we're gonna cover things like the filtration, the pool pump, those things that pop up. What we're not gonna cover is the waterfall, the fill line, the lights, all the little extras, just things that make the pool run properly.
Cool.
I love seeing you guys.
Thank you guys, thank you, appreciate it, good job.
I need some business.
I tell you what, no, I don't know how you, I don't know if you sleep at night, but you are busy. Every time I see you on Instagram, you are doing something at some event, I'm like,
We're not talking about Instagram right
yeah. Has anybody seen Rock the Block, Las Vegas? Anybody see that show? I'm trying not to cuss at you guys, are you shitting me?
It was around the corner.
Okay, I didn't watch the whole thing, okay, but my wife did, and on Sunday, they opened them up. And for a $5 donation, you could go through all the houses. And it was kind of cool, because you see it on TV, and you see them designing the rooms and doing all the stuff, you know, which one you want. And then you go actually physically see them, it was kind of cool. So it was actually neat, it was freaking packed, but it was actually pretty cool, so I can't. I'm not going there. All right. Our next, our special guest is Chris DeWitt. Give him a big hand. Come up, Chris.
Can you guys hear me? Oh, here we go.
Whoa, dude,
Great
nice.
meeting. Real quick, so today we're gonna be going over the VA FHA loan assumptions. My goal here today is to teach you guys to be able to do this process a little bit better.
There's
There's a lot
one
of-
just hit this number, the arrow right here to run your sheet down.
Yeah, I'll be looking up here.
You don't even need a microphone.
But, yeah, so VA loan assumptions, essentially my goal here today is to teach you guys how to do this a little bit better. You know, a lot of people are kind of afraid to do them because they're inexperienced with them. Real quick, can I get a show of hands of anyone that has successfully completed a loan assumption? All right, so we got 2, 3. All right, so we got 3 people, in a room full of like 30 people right now. So I mean, there's a lot that goes into it, and we're gonna go ahead and take a deep dive. So I do know a lot of you in this room, but for those of you that I don't know, I am a team leader here in the Realty One Group Northwest office. I'm a prior military guy. I did 12 and a half years active duty. Nellis was actually my last duty station. Last year I was one of the top 100 individual agents, Las Vegas Grow producers, and I've done over 90 million in personal sales volume over the last 5 years. Closed over 250 transaction size over the last 5 years. Personally used the VA loan 3 times and represented over 150 buyer clients using the VA loan. I've actually closed over 15 assumption transaction size over the last 3 years. A little session outline, we're gonna be taking a deep dive into the assumption process. I'm gonna share some of this real world experience that I've done working directly with some of these mortgage companies on assumptions. Review typical timelines required to successfully complete an assumption, and then identify some of these key conversations that we need to have with our sellers moving forward to determine if an assumption is something that would work for them. Also, we're gonna explore some new ways to generate business by effectively marketing VA and FHA assumable loans. Alright, so why VA FHA assumable loans matter in today's market? First off, we all know the interest rates are a lot higher right now than they were 4 or 5 years ago. And the payment difference between 2% and 6.5% is such a big increase, it really makes affordability an issue in the current market. So these loan assumptions, they allow buyers to take over existing low interest loans, often resulting in lower monthly payments. And these higher rate environments, assumptions can definitely help buyers qualify for more home while keeping payments low as well. And also, agents who understand how to do these assumptions properly definitely gain a strong competitive advantage in the marketplace, especially when it comes to taking new listings or working with potential buyers or a situation might work for them. All right, quick overview, VA, FHA, loan assumptions, so they're actually pretty similar when it comes to the process. One of the big differences, the VA actually has special forms for entitlement. With FHA, they don't have, you know, the same requirements once you close that loan. It's done, so there is no liability from the seller potentially. And we'll talk about that a little bit more in some of these later slides. Both veterans and non-veterans can do a VA assumable loan. A lot of people have the misconception that they can't. One of the biggest things is the entitlement tied to the property. When the buyer is a veteran, the VA entitlement may be substituted. When the buyer is a non-veteran, the seller's entitlement typically gets tied to the property for the life of the loan. And then looking at today's market, you know, you'd say hundreds per month, tens of thousands over the lifetime of the loan, just with that guarantee backed by the Department of Veteran Affairs. Also, FHA, one of the big differences with that is the mortgage insurance always applies for the lifetime of the loan. All right, looking at VA assumption guidelines, so creditworthiness. The lenders really set what their minimum requirement is as far as credit. The VA actually doesn't have a minimum credit score, but the lenders, and so the ones who have the loan are the ones taking all the risks, so typically they require 620 plus to be able to do these VA assumables. Occupancy status, so the occupancy status, the buyer actually has to agree to occupy the property as a primary residence for a year, that's kind of the standard. Loan status, so the loan does need to be in good standing. Equity payment, so the buyer must pay the seller the difference between the home's purchase price and the remaining mortgage balance. Essentially that's the equity gap. When we're looking at the gap, so let's say our list price is $400K, and let's say the loan amount's $325K, so there's about a $75,000 difference there. Typically, that needs to be paid in the form of like a down payment. You could get a second position loan, HELOC, you know, there's different creative financing terms, but some way, shape, or form, you're gonna have to be able to cover that equity gap. VA funding fee, so there's a 0.5% VA funding fee on the loan balance that is required when doing these VA loan assumptions. That fee can be waived if the buyer is a veteran with eligible for 10% VA disability rating or higher. Also, release the liability. To fully remove the seller from liability, the lender at VA must approve the substitution of the buyer's entitlement to ensure the seller is not liable if the buyer defaults. I'm going to mention that a few times throughout this presentation because it's one of the most important factors, is that potentially doing these loan assumptions, the seller may still be liable in the event that the new buyer defaults on the loan. We'll talk a little bit about how we can avoid that as well. FHA assumption guidelines, so the general rule of thumb is the 580 minimum, but the lender can actually set the guidelines to where they have a higher minimum, and a lot of lenders actually require 620 plus to be able to assume an FHA loan. Debt to income, generally looking at 43% or less. You know, may go up a little bit higher with different compensating factors, you know, maybe a little bit more money in the bank. Occupancy also should be purchased as a primary principal residence. Equity payment, also an equity gap there. And there's no appraisal required, and that's for the VA and FHA assumptions. So either one of them, no appraisal is required. That being said, you know, as a buyer, you can still put that in your contract that you want the appraisal to be a contingency. If you're a strong seller's agent, though, I would recommend, you know, forcing that to be waived, because if the appraisal is a contingency, you know, where's the real value in that? You might as well just sell it to, you know, a conventional buyer. How to pre-qualify buyers. So this is another big question, especially if you're on the listing agent side, because sometimes, you know, you'll get buyer's offers and they won't be pre-approved prior to coming to you or submitting an offer. One of the things that I look for, typically I will ask the buyer to go ahead and provide a pre-approval. And then also, you know, do they have that certificate of eligibility to potentially replace the sellers as well? That's another factor that I'm kind of looking at. especially with those, veteran sellers, that way their eligibility isn't tied up for the life of the loan. Also, proof of funds, you know, is there a proof of funds to cover the gap in the loan, difference in the purchase price and actual loan amount? And or, you know, how are they going to, pay that gap? Also, what's the buyer's credit score? You know, it's a big question we gotta ask, you know, if they're teetering around 580, you know, an FHA assumable, you know, one hit to their credit may make the difference in approval or a non-approval. Also, you know, job history, you know, background, do they have that 2 years of work experience that a lot of lenders are looking for? Those are all factors that I'm kind of taking into account when making recommendations to my sellers, if the buyer is a strong, buyer for the loan assumption. All right, forms. So the Department of Veteran Affairs has 4, I think there might be one additional form, but main forms that are associated with these VA assumable deals. One of the first ones, we're looking at the assumption, entitlement, acknowledgement. This is required for all the assumptions to confirm the understanding of the entitlement impact, especially if someone without entitlement is going to assume the loan. Second off, we have the statement of veteran assuming GI loan. So that is the main form for substitution of entitlement and liability. So if the buyer does have certificate of eligibility to potentially replace the sellers, this is the form that needs to get done to make that happen. And that's also paired with the last form on here, 266381, application for assumption approval and or release from personal liability to the loan. Essentially, you know, if a non-VA buyer assumes that government-backed loan, the VA, you know, they would pay for a default. So if they're paying, you know, the mortgage company a fourth of whatever that loan that you just defaulted on, those are debt there. So if we let the non-veteran assume it, that debt doesn't just go away. It's tied to the original seller's benefits. And with that, you know, if you're trying to use a VA loan again, they're gonna expect you to pay that money back before they'll allow you to use another VA loan. How the assumption process works. So essentially the agent and or seller are gonna send a fully executed contract to the mortgage company. In a lot of instances, we're actually going to, the lender will have like a separate form, like a request to begin the assumption that they want the seller to sign with the buyer's info as well. And then typically the lender will schedule a call with the buyer, take a loan application over the phone, and then they'll ask you for required supporting documentation with that application. And then a couple of big factors when doing these assumptions is trying to set that realistic timeline with your client. You know, a lot of people, I know I was just talking to Jessica on my way in, she said she was dealing with, you know, an agent that was doing an assumption and they had a super short escrow and they're doing a contingent purchase on one of her new builds. Well, they didn't set a realistic timeline for that because they're asking for an extension because their home sale still hasn't closed because it's a, you know, upwards of like 90-day escrow. Whereas, you know, I think it was maybe a quick move and they were giving them incentives on, and now they're circling back. And she doesn't know if she's gonna be able to make that deal happen, because she's gotta go to her management now, because the agent that was doing the assumption on the listing side had no idea what they were doing. So it's something that we need to be super privy of if you guys are facilitating a suitable deal, just so you don't get yourself in trouble. Also, let's see, escrow function, that's pretty similar to just doing a regular escrow. It is a little bit longer in terms of the processing and everything, but it is pretty like standard escrow as far as facilitating, you know, what goes on with that. Financial documentation. So this is just typically what a lender will ask for. Copy ID, driver's license, social security, income verification, pay stubs last 30 days, W-2, 1099s past 2 years, tax returns. A lot of times they look at that for the past few years. Asset statements, realistically, they're gonna wanna look at all your assets, you know, anything that you may own. You know, I've had, I think Freedom Mortgage, they wanted like an itemized list of like everything, you know, by, like everything from assets, car debts, any kind of investment accounts, equity and other properties that you may have had. And then also debt documentation. So they're looking for, you know, any kind of current debts, child support, alimony. All those things are part of the financial documentation that the lender is going to ask for. Alright, so gonna go over a couple past experiences with some assumptions and the different timelines. And like I said before, really establishing the assumption, make sure to check with the mortgage company to ensure that you have the proper timelines for your purchase agreements. So US Bank was the longest successful assumption that I completed. It was 141 days from FE contract to close. So almost, short of 6 months, like 5-month timeline just to get that one closed. I actually had, go ahead.
It was manual, right? They don't do any automated underwriting?
So their processing times are essentially a lot longer, but one of the beginning stages is the seller has to actually order a paper copy of the application, then they want to mail it to the seller, they want the seller to give it to the buyer, they want the buyer to fill it out, they want the buyer to send it back to the company. And I was like, well, why can't we just get an email application and go ahead and get this thing started? So there's three weeks to a month in processing time to even get it initiated. And then the truth is, with a lot of these lenders, there's not a lot of money in the assumptions for them. So they just don't have a really big department to get these processed super quickly. So it's just something to be mindful of that, there may be a little bit of delays in the wait times on those. New Res Bank, so essentially the process, schedule the application with the lender, submit supporting docs. It was pretty streamlined for the most part. They did have a little bit kind of longer processing time. And essentially, you kind of line it up to close. I successfully did one of these for about 75 days. We were looking at about a 65 to 85 day timeline. Freedom Mortgage, so I do a lot of VA assumptions, more so than FHA, just because they're a lot more common in the current market. But I've actually closed 6 assumption transaction sites with them, and they kind of range from that 50 to 75 days from contract to close. Essentially the process, sending an application, and they actually have an assumption request form, whereas, a couple of these banks do that, just to get the seller to say, hey, we want to go ahead and start processing the assumption. And then schedule a buyer call. So that's super important to get that call scheduled ahead of time, because it could take 2-3 weeks to upwards of a month to even get that call scheduled for the application. Supporting docs, they ask for that, loan processing, underwriting, and then they essentially line it up to close. Penny Mac and Loan Depot, they were pretty similar as far as process to Freedom Mortgage and Res. Alright, so next we're gonna talk about communication during the assumption
Chris,
process. Yes,
So
sir.
real quick, when you're gonna do a Zoom call, are you talking to the seller, or is the agent talking to the seller about, hey, this could take 5 months, 6 months, and then?
Yeah,
Is
yeah.
everybody upfront with that, let them know it, is there any pushback? Oh my God, you wait that long?
Yeah, so the assumption isn't, good for everybody. Like I have a ton of clients where it's like, hey, we could potentially advertise this as an assumption, but it may take, 60 to 120 days, really depending on your bank. If it's a bank I'm familiar with, like they're like, hey, I got US Bank, I'm like, this could take 6 months. Do you have the time to be able to
Right.
accommodate for that? Are you okay with maybe making your mortgage payments as we kind of wait for the processing? Is the offer good enough to where it makes sense for you to wait?
Right.
Are they paying like 20,000 over market value? In that case, it's probably worth waiting, 4 or 5 months to facilitate that transaction. So it really just depends on, what's gonna work for the seller.
So in your opinion, is it the buyer's agent should be explaining it to the seller, or should you be the seller's agent be talking to the seller?
So as a seller's agent, you definitely should help facilitate.
Because
the
they don't know,
process
I mean,
of
most of
the
them know
buyer.
about assumables, and you're pretty good at them. I mean, man, this could open your eyes up. Some sellers, hey, I need 3 months, it's probably not a problem, but some that don't, so like I say, I guess it's, I'm just wondering, because I know that one thing that we run into a lot in real estate is communication.
Right.
We've got more ways to communicate today than we've ever had in our lifetime, we have the least amount of communication going on. So that's why we gotta really, make sure that they, as sellers, really understand that what's going on, and how long this could take.
Right.
Because I'm sure if somebody doesn't explain to them, we're 5 months into it, 4 months into it, they're freaking out.
Yeah, no, absolutely. And I've had that in the past where, they weren't thoroughly educated, we didn't do enough research on the process, maybe it was my first 1 or 2, and it's like, oh man, this is actually gonna take upwards of 6 months. It's like, well, now the deal's falling apart, because we all thought we'd get it done in 60 to 90 days, because that's what Google said.
Right.
So, really connect with the bank to get a realistic timeline, because, maybe their processing department's backed up, maybe they're not, maybe they're a little faster than anticipated. But one of the most important things, so the lender is not gonna communicate with the agents or titles or the buyer unless you obtain a third-party authorization form. So it's super important to get this up front ahead of time, that way you're able to talk to the mortgage company and they'll actually give you details in the process of where you're at in the loan. If you don't have this third-party authorization, you get on the phone with them, they're gonna be like, I can't tell you anything. So it's something that's super important. I feel like all parties should have it, buyer, seller, seller's agent, buyer's agent, just to help facilitate the process a little bit quicker. But it is absolutely necessary, you know, for the buyer, seller, and title to have it just to facilitate the deal. And then I highly recommend connecting with a lender on a weekly basis as well, just so we know the ball's not getting dropped. I'm gonna give you an example. I had an assumption deal where, you know, the buyer thought everything was getting processed. The next thing you know, it's like, all right, well, where are we at? You know, lender, and they're like, oh, well, we sent this email to the buyer 2 weeks ago requesting some documentation, and they've just been sitting on it. So that's 2 weeks automatically added to the timeline because they didn't get that documentation to them in a timely manner. All right, we're gonna go into VA entitlement and kind of explain that a little bit. It is super confusing the way the VA does that, so bear with me and I'll answer any questions that you guys might have. But essentially, you know, the entitlement is the amount the VA guarantees on a loan. It does essentially tie to the conforming limits of whatever your county area is. When you're doing assumption, the entitlement is tied to the property while the VA loan is active, and it remains tied to the property unless the property is paid off or assumed by a veteran with eligibility to replace the seller's eligibility. So entitlement can be restored if you're having a conversation with your seller. They can get their entitlement benefits back if the buyer does have the eligibility to replace the sellers in the assumption, or if that loan's fully satisfied. Entitlement balance deduction. So this is super important, so listen up. The entitlement balance is the amount of the original loan purchase. I get people coming to me all the time, they're like, okay, well, there's only $300,000 on that loan. It's like, yeah, but it was originally purchased for $400K. Well, $400K is gonna be the amount debited if they do a substitution in benefits with the veterans. So it doesn't go down as you pay the loan down, it's whatever that original balance was, is how much they're gonna substitute, how much the benefits are gonna get dinged. When doing a non-veteran VA loan assumable, so like I said, the veteran is at a potential risk or liability if the loan later defaults. So it's something we definitely need to educate our sellers on, that hey, yeah, we can do the assumption, but if you plan on doing your VA loan getting down the road, if this buyer defaults, you may still be on the hook to the VA, especially if you're looking to use your benefits again. And then how to determine how much entitlement a veteran has, VA.gov, can actually do a request of their certificate of eligibility. So now we're gonna talk about formula, because this is where it gets done. So we're looking at basic entitlement of $36,000. So the VA guarantees this amount of loans up to $144,000. There isn't a single family house in Vegas you can buy from, especially one that's gonna pass VA requirements.
Yeah.
So when we look at that, you know, a veteran gets this, they're like, all right, I got my certificate of eligibility, I don't know what this means, I can't buy anything for $144,000. Well, so the VA actually links its guarantee to the conforming loan limits for conventional financing. So when we look at actual VA, you know, what they're willing to back, essentially it's 1/4 of whatever the loan limit is right now. And I believe that's $832,750, am I right, Dave? Yeah? Alright. So that's the VA, you know, kind of max. Partial substitution, so I've never done a partial substitution on one of these assumable deals. But supposedly, you know, some of the research I did that you can do partial substitution on entitlement if you do a loan assumption. And then with full entitlement, the $36,000, you actually have no VA loan limits. So if they did a jumbo loan for $2 million, they're going to assume that loan, your buyer is potentially gonna need full VA loan benefits in order to substitute or replace the seller's loan eligibility. Verbiage and contracts. So consult with your broker, your attorney. This is just stuff that I use in my contracts. One of the biggest things, so typically, you know, when I'm going to my seller, I'm like, hey, you know, you want to do this VA assumption? I'm telling them, hey, we need to look for a buyer with the VA eligibility to substitute your own. That way you're not liable for the loan down the road, and your benefits aren't tied to the property forever. So when we look at this, you know, buyer's loan eligibility to replace the seller's VA loan eligibility at the close of escrow. So it's one of the terms that I use to make sure that substitution happens. When we're looking at close of escrow, you You know, depending on which mortgage company it's through, we're looking at 60 to 120 days, really depending on the lender's average time to close the assumption deal. So it's something we gotta check with the lender. Please don't use Google and just assume that that's right, because, you know, it's kind of bit me in the ass on prior deals. In order to protect your buyer, I always highly recommend asking for a 60-day plus loan contingency. That way, if the loan is not closed, you know, within that time, you can ask for a short extension, but at least you have a better idea if it's gonna get approved or not. Appraisal waiver. So for my sellers, when I'm representing them on these assumable deals, every assumable deal I've done representing a seller, we've got the appraisal waiver. It's not an actual requirement that a VA or lender has. And if you do have an appraisal contingency, the lender's not gonna automatically order the appraisal like they typically would whenever you're doing a regular deal. The buyer is gonna have to order that, or, you know, the agent help put the order in, so they can actually get that appraisal done. Got next. And if anybody has any questions at any point, you know, feel free to ask. Down payment equity gap consideration, so the most common one with these assumable deals is cash. Cash is king when it comes to the assumable deals. Using gift funds as well. HELOCs, you know, if you own another property and you pull some equity out of another property, that's another potential way you can do it. Seller financing, possible outlet as well, and or gift funds. Alright, so loan assumption advertising. So this stuff is gold when it comes to advertising. Whether or not you facilitate a VA loan assumption with your listing or not, like I said, it's gold. You know, I do little ads like this all the time, and or, you know, on some of my posts as well, you know, advertising the 2.375 VA assumable loan. It just gets buyers engaged. Also sellers that are potentially interested, you know, maybe they're a veteran, they have a lower interest rate, they're like, hey, you know, maybe I could get some more money out of my potential deal with that. So it does spur a lot of interest whenever we're looking at advertising as well. Same with like new builds, you know, one of the hooks that they do, they advertise, oh, you know, 3.99%. You know, we can do this with assumable deals as well to help drive some of that traffic. Local ads, social media, so marketplace posts, that's something, you know, I'm talking about as well. Here's an example of a client that I ended up pulling with just, you know, doing a marketplace ad, advertising this VA assumable. This veteran in particular, he didn't do the assumption. You know, he didn't have a big down payment, he really didn't want to take a second position loan for $150,000 at 9%. So it didn't really make sense for him, but he did want to get into a house, so at least open the door for some conversation there to get more clients. I ended up closing this client a few months ago. You know, it started with a conversation a year ago, and it was kind of picked up from there. And then you can also position yourself, you know, as a go-to VA, military, even FHA assumable expert as well, you know, making social media content. All right, so real world payment comparison. So this is, let's say, taxes, insurance, everything is about the same. This is just an example. But if we're looking at 2.5%, you know, assumed VA loan versus 6.75% new loan financing. So 400K finance, you're estimated at about 1963. If you're looking at 6.75 on a VA loan, 400K finance estimated at about 2977. So we're looking at about $1,000 difference in payment there. If you can't see the value in that, I mean, it's a ridiculous amount. Monthly payment savings, you know, can range from hundreds of dollars to, you know, $1,000 in this example. Long-term interest savings, you know, tens of thousands, you know, over $100,000 over the course of the lifetime of the loan. Lower monthly payments, it can increase buyers' purchasing power as well, and also allows buyers to afford higher priced homes without increasing income requirements. When we look at these, if you show a breakdown like this to one of your potential buyers, you're really gonna see the value of these assumptions, and or your sellers. All right, so how can agents find assumable loan opportunities? One of the best things is prospecting homeowners with low interest rates. And or, you know, if you go to a listing appointment, it's like, hey, you've owned this since 2021. If you don't mind me asking, you know, what's your interest rate? And what's your loan type? You know, is it FHA, is it VA, was it conventional at the time that you had it? You know, they might not know that, hey, you know, you have an FHA, potentially it's assumable. Let's give it to the lender and see if we can market it as such. Also, you know, search in the MLS remarks, listing descriptions, keywords indicating assumable loan opportunities, farming, military communities, and neighborhoods with high VA loan usage, mining your database for past VA buyers, FHA buyers that you've already closed, looking at maybe some expired listings, any kind of long-term owners that, purchase their house or maybe refinance around that 2018 to like 2022, early 2022 timeframe. Also, social media hooks, educating the buyers and sellers on potential assumable loans, and then position yourself as the expert as well and help you lock in some of these new opportunities. All right, listing presentation strategies. So clearly explaining the assumable loans to the seller. It's one of those ways to attract more qualified buyers and increase marketability. Also, letting the seller know that, hey, it's a unique selling feature that we can advertise as well. Using language in your post like low assumable rate opportunity, potential payment savings, and then creating urgency, with the limited availability that these assumptions are in this market. Also showing sellers how assumable loans can expand, the buyer pool potentially, reduce time on market. This is also another way to have conversations with your buyers that have been on the fence for 2 years because the interest rates are high. It's like, hey, if I can find you the right deal, would you be open to jumping back in the market right now, especially if we get you, a 2.5% interest rate. So those are all good key conversations that you can have, with your buyers and or sellers. And then buyer consultation strategies. One of the biggest things with the buyers, honestly, I'm looking for cash to close. I don't want to deal with a second position loan. I don't want to throw another monkey wrench into it. So a lot of times when I'm qualifying my buyers, cash is king. If they have the cash, it makes this assumable opportunity a lot easier to get your offer accepted first off. And then, being able to facilitate the process without having some extra monkey wrenches thrown in there. And then, going over the fees, setting those realistic expectations for the equity gap. All right, common mistakes that agents make. One of the biggest things is not fully understanding how VA entitlement works, and then how it affects eligibility assumptions and future borrowing power for the seller and or buyer. Overpromising timelines, accounting for whether reviewing VA approval. Failing to clearly explain equity gap and what's actually due, payments you need to make up front and or down payment. And then marketing assumable loans incorrectly where it's causing potential confusion with these potential buyers and then setting those unrealistic expectations where they can't actually facilitate these deals. But yeah, there's a ton of opportunities in the assumption realm. Let's talk about marketing, lead generation around assumptions real quick. Using those social media hooks focused on savings, lower payment, urgency. A lot of people are doing video now. All the top agents that I know are creating videos. Something you can do is explain the assumable loan, maybe give a real world example as far as monthly payments. Also, assume rate versus current rates, doing like a simple comparison side by side. And then you can position yourself as a local expert through, doing consistent educational content. One of the things I always said, kind of coming into real estate, fake it till you make it. You're making a video, everybody that sees that video sees you explaining it. They don't know you use ChatGPT to come up with a script. So, something that would definitely be beneficial. And then, real quick, so I did want to go over the secret sauce. Because I've had a lot of agents in the past, ask me personally, how did I build my business where I'm averaging 50 plus deals a year in individual sales. One of those ways was learning from people that were already producing at the next level that you guys want to reach. First off, having the right mentor really shortens the curve, helps you avoid costly mistakes, gives you proven systems instead of kind of guessing your way, and reinventing the wheel. At the end of the day, the basic stuff works in real estate, and it's something that we all need to circle back to continue to facilitate and getting more and new business as well. Stay coachable, implementing things quickly. Going to classes like this aren't going to change your business magically. We got to take massive action, and that's what the effort is going to actually show in your business in the long term. Also, building consistency through accountability, having a strong coach or mentor that'll help you stay disciplined throughout the throughout your growth within your business. I'm actually coaching, I'm a real estate coach, but I also have a coach that mentors me. My coach is already at the next level that I want to be. He's no longer in production, but he did run a larger real estate team at a higher level. Selling 100 houses a month. Do I want to be at that level? Absolutely not. But latch on to someone who is already producing at that higher level. it's one of those sure ways to actually grow by, not reinventing the wheel, and just kind of taking a role model, going with what's working for them. Also, surrounding yourself with high performers, being in the right environment, elevate your mindset, work ethic, confidence, energy habits, success, leaves clues, have good proximity around some of those top agents to help accelerate growth. And hopefully that helps. Jeff, I don't know if you have anything to add.
Good, I love the secret sauce, and I tell everybody all the time, you gotta get back to basics, everything's magic. I remember, I'm dating myself and Dave Gonzalez over there, remember when Facebook started? And I had agents say, oh my God, I'm never gonna prospect again, Facebook's here gonna save us, and guess what, it didn't. So I think getting back to the basics is where it's at, and I think, just like you just said, get around people you wanna be around. Chris, can you give these guys a copy of this presentation?
Oof, man, a lot of work went into that, but yes, I can.
Good. Hey, there's a lot of work to do what you're doing, so.
Yeah.
And the best part about what Chris is doing, you guys, it's only been a real estate agent now for about, I think you're coming up on 5 years now, right?
Yeah,
5 years?
5 years.
The first 2 years you did it part-time. And so he's done amazing. And just like you said, I love some of the stuff right here. This is stuff we all know. But we don't want to get back to the basics, because then we gotta talk to people. And we are secret agents. I don't wanna talk to anybody about real estate. So that's the biggest thing. Any questions for Chris, you guys?
Okay, what do you got?
Have you ever dealt with a client that just wants to get the property off his hands, he didn't care to make any money off of it, just wanted to find a lawyer?
Yeah, I'm actually dealing with a deal right now, good friends of mine, and they're paying like $50K closing, because they just wanna get rid of the house, they wanna pick up, move to Florida, and just restart. So I have had sellers in the past that, just wanna get rid of properties, be done with it, kind of move on.
So they're gonna lose money?
Yeah, I've had sellers lose money, if it makes sense for their situation and they wanna do it, who am I to stop them? As long as you're gonna pay me my commission as well, I'm still gonna facilitate the transaction. If this is a situation that works best for you, I'm not afraid of you losing money if that's what makes sense for you.
Well, at the end of the day, guys, it's not about us, it's about what they want. And if they're willing to do it, that's up to them. Right? I just make sure they understand what they're getting into, and you cover your bases. I was just asking George over here, Rock Title might be able to get you a list of VA loans in a certain area that you're farming, which might give you a big help in hand. So that's something to sort of think about as well. Onboarding we're going to do tomorrow, Tim doing it at 1 o'clock. This is for new agents as well, so make sure your new agent get on there. These are our rev-up schedules. Tomorrow morning, I'm actually teaching the residential purchase agreement in Tim's office tomorrow at 9 o'clock, so if anybody wants to come there, we'll do it live and Zoom as well, so you're more than welcome to come. And then we're going to have Wind Down Wednesday, which is next Wednesday. Again, $100 gas card, plus some good charcuterie boards, and just good, great conversation. So make sure you get on that. We talked about that. And then last but not least, this is the address for next week. We're doing a field trip next week to Jessica's property. Richmond American Homes have been great partners. They've always paid our agents. When she said Woodside, I kind of cringed a little bit, because Woodside has been classic for screwing agents. So I think they're going to change all that, which is good. But anyways, that's where it's going to be next week. Be there. I appreciate everybody coming today. Chris, thank you so much. Thank you for all our vendors. And there's some food back there as well, guys. Thanks. Appreciate everybody coming. Good job.